Thank you very much for coming. I really appreciate it. We've got a really good opportunity here in Capital Funding's Mortgage Fund 1 that we want to share with you. So without further ado, let's jump in. All right, Capital Funding's Mortgage Fund 1, here we go. So here are a few things that we're going to cover during the presentation. We're going to give you an introduction to the Capital Funding's team. We're going to talk about Capital Funding's LLC. That's the company that's been around since 2014. And then we're going to introduce you to the opportunity that we're presenting to you, Capital Funding's Mortgage Fund 1, which was started in 2023. So if you don't know about Capital Funding's, we are a lending company. We lend to private investors that do fix and flip properties. They'll buy the property that's distressed, they'll put money into the property, they'll fix it up, and then they'll sell it, or they'll refinance the property and keep it as a rental property. So we like to call that fix and flip. You may have seen it. It's been famously popularized on TV with all the fix and flip shows, fix this or flip this house, and go on and on and on. They've been on for years and really exploded the industry for the private investor to come on and get excited about maybe making additional income to their regular job by renovating houses. So that is a fix and flip. That's what Capital Fundings does. We give money to our borrowers to help purchase the property and to fix up the property so they can sell it at a profit. And why are we here? Why did you join us tonight? Well, we're here to talk about the opportunity for Capital Funding's Mortgage Fund 1, which we think is a safe investment and we think is a high yielding investment compared to the risk associated with it. We've got historical performance since 2014 without any losses, without any foreclosures. So we're a conservative investment. We distribute our income monthly, so we're a conservative, consistent investment. And right now we've been yielding over 10% for 2024. So we think we're a really high yielding alternative to money in the bank, like a CD or other items that are typically 5% or less. So here's a brief video that we like to show everyone. It just talks about Capital Fundings, where we started and how we've kind of grown, and tells a little backstory about us. I'm Alex Bogumil. I'm the owner and operator of Capital Fundings, LLC. We're extremely proud to say that in 2023, Capital Fundings was the leading private lender by originations in the Central Florida market. And we had over 115 five-star Google reviews for a 5-star average. We believe Capital Funding stands out for several reasons. One, we're local. We understand the markets here in Orlando and Central Florida. Two, we can move fast. We can close. We don't have to do third-party appraisals. We don't have to do all the other requirements that many of the national lenders require you to do. And most importantly, we've been there. We've seen the investment process from start to finish, and we can add value to our borrowers, sharing that knowledge with them. 80% of our borrowers are repeat borrowers. Once they come and experience Capital Fundings and everything we offer, they like it and they do more loans and more business with us.
As I'm talking to you today, I'm sitting in one of my renovations. I have 3 other renovations going, all financed through Capital Fundings from the beginning to the end and then beyond. They are a phenomenal local resource for the state of Florida.
So I invite you to inquire about Capital Fundings and becoming an investor yourself. You can reach us at info@capfund.com or check out our website. All right, so meet me, Alex Bogumil, the owner and manager of Capital Fundings and the fund manager of Capital Funding's Mortgage Fund 1. So I just want to give you a brief description or background about myself. I think it's really important that you understand who you're investing with and understand, all of my expertise and my experience that I bring to the table. So let's give a brief overview of me. So I am from Central Florida. I was born in Ormond Beach and lived in Orlando for most of my life. I went to UCF to get a undergraduate degree with a study in finance and accounting and financial modeling. From UCF, I worked for CNL, which is a local company here, which is a real estate investment trust as well. And they lent money to restaurants. And from there at CNL, I finally moved off to California to go experience the wild, wild west. And when I was in California, I worked for Deutsche Bank modeling a lot of asset-backed lending deals and mortgage-backed security deals. And then finally, I went over to WFS Financial. We are the leading independent auto finance company, and we did about $6 billion in auto loans each year that I helped securitize and actually develop loss models for them. So around 2006, I was really kind of exhausted from doing the corporate thing and said, hey, let's jump into real estate. I had a couple friends that were really, really close from college that were making a lot of money doing the investment real estate. And I thought it was, a little bit of life freedom compared to the schedule of the corporate world. So little I know is probably wrong, but I just said, let's take a chance and let's jump into real estate. So my real estate background started, I moved to Nashville, Tennessee, and worked as a wholesaler for almost a year. And as a wholesaler, we found investment properties for investors that were looking to buy, fix, and sell the property. So we would find the deals, we'd mark them up a little bit and sell them to the investors, and they would fix them up, sell them for a profit, and come back and do it over and over again. From the Nashville office, the company I was working for, RealNet, we actually went to open up an office in Chicago. And after one cold winter there, I said, hey, it's time to come back home to Orlando. So I made my way back to Orlando, working for RealNet. And as of RealNet, I worked for them from 2007 through about 2014. Now at RealNet, we did a lot of, that was right during the mainstay of the financial crisis. So we had a lot of foreclosures that we dealt with, and I was buying properties from foreclosure auctions. I was buying short sales. I was buying directly from homeowners. I was buying from MLS as REO properties. So I really got to understand exactly, how to value properties, how to find properties, how to know what good deals are, and then also what it goes into a renovation. What does it cost to fix up a property, and then market them to investors and sell them off. It also gave me a really good background with investors, especially in the Central Florida area. I got to know a lot of other investors. I got to know a lot of wholesalers and create a really good network that I use to this day. So 2007, fast forward to about 2013, it was kind of a recurring theme that I had. A lot of deals that I would be part of that I was selling to investors would die at the closing table. And it was because the lender never showed up to fund the deal. So the people we were selling it to didn't have the money to purchase the property, and the deal just died there. The borrower, the investor lost their deposit. I didn't make a commission on the sale. And it was kind of like that aha moment where I said, hey, there's really an opportunity here in the marketplace, because the lending is very fragmented. It wasn't national at all. It was kind of your local person that had some country club money and would lend. And when they ran out, they were out. And they would leave you hanging if they had to leave you hanging. And it just was not the best service. You couldn't get anyone on the phone if you're in dire straits. And so that was like, hey, I've got an idea here. And that's when Capital Funding started. So what is Capital Fundings? We talked about it briefly, but Capital Fundings is a private money lender specializing in lending money to real estate investors for the purchase, renovation, and resale of distressed residential investment properties. In a nutshell, we provide borrowers with money to purchase and to renovate their property. Some of our highlights, like I said, we've been around since 2014. We've been lending in the Central Florida market. Over about 84% of our portfolio right now is in the 6 counties that are closest to us. So we're a local lender. We are not a national lender. We're not lending in South Florida. We're not in Jacksonville. We are a local lender. We've started with just a couple loans a year to doing about $50 million in loan originations a year in the growth for 10 years. So since 2014, we've underwritten, originated, and serviced over 1,130 loans, totaling more than $200 million. This is all in the Central Florida area. Currently, we are servicing about 220 loans, totaling about $50 million. In that process, Capital Funding, since 2014, we've had 0 losses and 0 foreclosures. That's 1,130 loans, and we've never had a loss. So what do one of these loans look like that we've done 1,130 times? Well, these are short-term loans. We give them to investors for them to have ample time to buy the property, to fix it up, and to resell it, or to refinance out. You can put a tenant in there and refinance out of the property. So our loans are interest only. They're 12 months in term. They're short-term. It's a recorded first lien position. These are first lien mortgages. We're first in line to get the money back. Usually we're lending to an entity, so we require a personal guarantee as well. So if something did happen, we also have the backdrop of a personal guarantee. All of the loans are closed with the title company. They have title insurance. Our title insurance policies are reviewed by our attorneys to make sure that these titles are clear and that we are in a safe, secure position. They have property insurance. If a property is burned down to the ground, they have to be insured up to the amount of the loan at a minimum. So we know that we're safe on our investment. We do ACH interest payments for our servicing. We make sure that our borrowers are set up to automatically pay on the 1st or the 10th of the month. That enables us to get a good handle on our receivables and get our interest payments out to our investors like yourself. And like I said, attorney reviewed. So we have a local attorney that reviews all of our transactions. They review the closing documents to ensure that they are perfected mortgages and that we don't have any issues if there were a problem to come up. Well, how do we underwrite these loans? Now that we know what a loan looks like, how do we underwrite them? What goes into our analysis to say, hey, we want to do this loan, or no thanks, we're going to pass on this loan? A lot. That's what it is, a lot. So we start off with an application. Borrowers go to our website, they fill out an application. From there, we're going to ask them for a bunch of information. We want 2 months bank statements. We want to make sure that they've got the ability to come up with a down payment. They've got the ability to start the renovations. They've got the ability to pay interest payments. And we don't want borrowers that are coming into this loan and just say, hey, I've got enough for a down payment, and then they're in trouble. We're going to review the contract for sale to make sure that nothing's going on. There's no fraud, that somebody's uncle isn't selling it to their nephew and marking it up a lot. We've got to look out for stuff like that. We're going to look at pictures or video of the property so we have an understanding of what needs to be done for the renovation. We also have our inspectors that can go out and take pictures of the property pre-funding to make sure that the property looks like what we think it looks like. So then we do our own internal valuation. This is one spot that differs us from some of the national lenders out there. We're only lending locally, so we have a really good idea. Myself, I've done over 100 fix and flips and partnered with 100 fix and flips. I've wholesaled over 1,000 properties in the Central Florida area. I've got a good understanding of the area. We've now done almost 1,150 loans. So we have a really good understanding of what are good areas, what are bad areas, and just little pieces of information that helps us out. So we don't require a third-party appraisal, and that is a really big benefit to our borrowers. They like that. That means we can move fast. That usually means we're better at valuing than the third-party appraiser because we're local and we know our markets better than a person that maybe not in the market. So we're going to pull a credit report. We're going to look at that credit report. Not only what is your FICO score, but we want to see what makes up your FICO score. Have you had delinquencies? Have you had anything worse than delinquencies? So we want to take that up. And then we're also going to do a borrower history. Have you done a fix and flip before? This is very important to us. Do you own any rental properties? Have you done a renovation? This is all stuff that's going to make our loans less risky the more that we know about our borrower and the more that experience that they have. So we'll look at the property appraiser's data from the property appraiser's website to verify all the information. We do a rental analysis on the property. What would happen if we had to take that property back and we rented it out? Would it make money? Would it break even? Would it lose money each month? What happens if the borrower didn't sell it and they had to rent it out? Would they lose money each month? These are things that we want to know because it's an exit strategy for us. And it really is important to understand, hey, if this property isn't cash flow positive, then that's going to apply more risk to the property. So we're going to look at the driver's license. We're going to review all the corporate documents. Usually, like I said, they typically close in an LLC or a corporation. So we're going to review those documents. If we have questions, we have our attorney review it. We're going to go over the scope of work so we have an understanding of what repairs that borrower thinks that needs to be made and what we think that need to be made. These can differ sometimes and it can blow a deal up. So as we've consistently stated, attorney review of title commitment and loan docs. We want to make sure that we've got clear title. We don't lend on property with clear title. We don't provide exceptions to these loans. And so we want to make sure that we do have clear title. And then there's also the title and property insurance. We want to make sure that's in place prior to closing to make sure that this property is properly insured. Why do our borrowers use capital fundings? So we are the trusted local lender with local knowledge. And this is probably the most important thing. We know our areas. We have inside information. People like to use that inside information. They call us all the time, hey, Alex, what do you think of this neighborhood? And we know that neighborhood because we've done loans in that neighborhood. I might have renovated a house in that neighborhood. So we add that value to our borrowers. We give them that knowledge. And they like the local fact. They like that they could stop by our office. That we're a person. They could talk to us. They can get us on the phone. They can text me. We're not just a sales rep that has never done a fix and flip before that's offering a rate that's competitive to ours, and they're going to take that because they can save $500. So they really like working with a local lender. Mine and our investment background adds value to our borrower's success. We're part of the borrower's team. They lean on us. They have questions for us. They want our insight. A lot of times we may have a new borrower, or maybe, for instance, a borrower that's done renovations for people and that this is going to be their first time doing it on their own. So they reach out to us. Hey, you guys have done this. Help me out. That could be from documentation. That could be from renovations. That could be from closing details. That could be from setting up a land trust. It's so much stuff that we actually add because we are investors ourselves. We've done the fix and flip process, and we have been very successful with it. So we share that. We're part of their team. We're fast. We can underwrite our own loans. We don't need that third-party appraisal. A lot of national lenders are going to be 3 weeks. We can close in a day. I don't like to do it, but we can do it. So typically our closings are 3 to 5 days, sometimes 7 days. A lot of the contracts that we're lending on, they require a quick closing. That's how the people that got the contract won the contract, is because, hey, we could close quick, and the sellers like that. So they get a contract, and our investors now have to close quick. So a lot of times we get a deal on Monday and says this thing has to close Friday. So that eliminates a lot of other national or other lenders that require that third-party appraiser. So that's a huge benefit to us. And if you check us out, a lot of borrowers nowadays, they go on the web. They want to see, how is Capital Fundings? They'll Google us. And when you Google us, you see we've got about 130 5-star Google reviews, and that's out of 130. We don't have anything less than a 5-star, which is a perfect review. So we're really, really proud of that, and we work hard at that. And it's definitely a good source to say that we've been providing great customer service to our borrowers. All right, so here's an important thing as an investor. You're going to ask yourself, all right, I like the yield. You guys are over 10%, but is it safe? I want my money to be safe. I don't want to worry about my money. I like getting extra money, and I like being able to sleep at night. So what makes this Capital Fundings investment safe? And we like to think, outside of everything else that we just talked about, is that we're very, very conservative on our underwriting. And let's explain a little bit about that, because not everybody understands. So not all private money lender investments are the same. When comparing lenders, as an investor, you should ask, what is their loan to purchase price? And what is their loan to after repair value statistics? A loan to purchase price is how much we're going to lend our borrowers compared to what they're buying the property for. So if they're buying a property for $200,000, are we going to loan them $180,000? Are we going to loan them $150,000? Are we going to lend them $100,000? So the lower the loan to purchase price is going to be a less risky investment for us. That means that the borrower has to contribute more of their capital as a down payment, which provides extra cushion to our mortgage in case something did go bad. So we've got a chart here to kind of review our historical performance of this loan to purchase price. So you can see, starting at 2014 all the way up to 2024, we've been really, really consistent. We're ranging, as we started to get volume in 2018, 75%, almost consistent every year, 75%. So what does that mean? That means the borrower is bringing 25% of the purchase price to close the deal. That means they've got to have their own capital to put into the deal. That means that our loan is that much more secure. And let's show, let's go back here. So typically, other lenders out there will lend up to 90% of the purchase price. I saw one recently, a national lender, the number 2 size by origination lender, says they'll go up to 92% of the purchase price they will give you, which means a borrower would only have to bring $18,000 on a $200,000 purchase. $18,000 people could walk away from. But if you're bringing $50,000 or $60,000, they're going to think twice about walking away, and they're going to try to find a solution if the going gets bad. So the other statistic is your loan to after repair value. Now this amount is going to include the amount we're going to give the borrower for their renovations. We're going to give you 75% on average for the purchase of the price, and we'll lend you the money to renovate the property. We like lending money to renovate the property. Why? Because we send inspectors out there to make sure that the progress is getting done, and then we reimburse the borrower's money with this renovation money that they've already incurred. So this makes sure that we've got our eyes on the property. We can see the forward progress of the property being renovated, and that we're only releasing the funds once what they say is done is actually being done. So it's really, really good for us to lend money to people for the renovations of the loans. And this statistics, we're going to compare what is that total loan amount to the after repair value. The after repair value is what we estimate it's going to be worth after the renovations are done, before they're ready to sell the property. So typically, we like to be around the 65%. That would indicate that after the renovations are done, there's still 35% equity in the deal compared to what we think they could sell it for. So our after repair value is what we estimate the property to be worth after the renovations are done. We apply this value when we're underwriting the property, and we estimate it, and then we also compare it after they sell the property as to how we did. So here's our historical performance, 2014 again, all the way up to 2024, and you're going to see typically we're in the 60 to 62%. That means that about 40% we have before the after repair value as our loan amount compared to the after repair value. So if the property went down 40%, then our mortgage would be paid off. Any further, our mortgage would be at risk. But that's a really, really big cushion. So if the market dropped 40% and we are at 60% on our loan to after repair value, we would still be neutral. We wouldn't incur a loss. So this is really, really good. This is conservative. You can see historically it's consistent also, something we want to do. So these last two graphs, what do they show? They show that we've been consistent and that we've been conservative in our underwriting. So capital fundings versus other lenders. There's the other lenders out there, the national guys that are offering 90% of purchase price and 75% of after repair value. This is what we're competing against. So in 2023, our average loan to after repair value was 62%. So 38% cushion compared to what we estimated the purchase or the resale value to be. In 2023, the average loan to purchase price is 76%. So we're requiring that borrower to bring 24% as a down payment. $200,000 loan, that's $50,000 almost to bring as a down payment. Whereas another lender, a national lender, may require $18,000 to $20,000. So what does this mean? We require borrowers to put more of their cash into the purchase than most lenders out there. What does this mean? It means our loans are going to be less risky than compared to other loans. And that is proven out because as of 2014, 0 foreclosures and 0 losses. And again, just to reiterate, these are all attorney reviewed. These are local loans. We understand the market, so we know where to make loans and where not to make loans, where loans need to be more conservative because of the location. We understand our local real estate markets. Historical track record of 2014, 0 losses, 0 foreclosures. I'm going to keep saying that. We're pretty proud of that. Repeat borrowers. This is also something that's going to make us safe. And this is something that really shows capital funding stands out compared to other lenders. Repeat borrowers in 2023, 75% of our originations were from repeat borrowers. What does that mean? That means they've satisfied a loan with us. That means we're comfortable with them. That means that we understand that they probably do a good job on their renovations, which means that it's a safer loan. If we're loaning all to new, if we, charge a high rate or provide bad customer service and we're constantly lending to new borrowers, that's risky. We don't know those borrowers. We don't know how they're going to do their renovations. We don't know their success rate. So here's the statistic that actually compares what do we estimate at the beginning, the after repair value, to the sales price. So what is that loan to sales price? And so after the property sells, we're going to look at the loan amount to the sales price. And here again, 60%. And that was almost spot on with our loan to our estimated after repair value, which means that we're doing a good job of estimating our values. We really understand our markets and we're underwriting these loans really, really well because what we estimate it to be is what it turns out to be. And 40% cushion on the loan, that means you're in first position for 40% loss before you're in danger of risking losing principal. So here's our annual originations, and this kind of shows you. 2014, I was using my brother's money. I made a couple loans to a couple friends. He got a little bit more money. I made a couple more loans. And then we started finding some private investors that wanted to back our deals, that liked our loans, that we are selling the loans to. We would make the loan and we'd sign it to them. And then 2017, 2018, we really started growing some trust with some of our main private investors, and they really started getting comfortable with us and opening up their pocketbooks. They liked this. They were making good money, no losses, no foreclosures, consistent monthly interest payments. They enjoyed that. And you could see 2000 as we grow here, 2021, almost 40 million, 2022, almost 50 million, 2023, we started to run out of capital. We needed more capital. So this is when we kind of came up with the idea for the fund. In 2024, we're projected, based on May and June, we'll probably hit $50 million in originations. So here's a chart with kind of our historical performance dating back to 2019 when we really started doing some substantial originations. And you can see everything is super consistent. Loan to cost is very consistent. Loan to after repair value, very consistent. Our loan to sales price, 50. I mean, we're in the 50s here. That's really, really conservative, really good. And then our recurring borrower percentage, you'll see it here. As we start to get more volume, we've getting people 80%, 75%. 75% of originations are with recurring borrowers. That's great. All right, so 2022 started coming along, and we started realizing, hey, we need to have another vehicle to raise capital. Outside of our direct investors, it's always good to diversify your capital sources. And in 2022, we started working with leading attorneys in the private money lending industry, and we started working with accountants to get the framework of the fund and to put together all the required documents for the fund. So what is the fund? It's something that we're raising capital for. It's an investment that our investors make. They're going to take an equity position in the fund. But what is it? So the fund is the same thing we've been doing. We're lending to our same borrowers. We're just, instead of selling the mortgage, we're putting the mortgage in a pool that our investors own a portion of that pool. So the fund leverages the experience we have gained over the last 10 years to provide accredited investors a platform to invest in a diversified pool of performing mortgages. The mortgages are the same. They're going to be here in Central Florida. Nothing changes about the mortgages. Instead of putting them in capital fundings and assigning them to somebody else, we're now just putting them into Capital Fundings Mortgage Fund 1 and then paying out our monthly distributions. So we've got a monthly distribution of the fund's income to investors to provide an annualized target yield of 9 to 11%. That's where we want to be. Personally, I like double digits, so I'm trying to be north of 10 for our investors. That's my goal. So the way it's structured is to provide a 7% preferred return, and then we share in the net profits of the fund. Each month, we calculate the net profits of the fund, and we distribute 75% to our investors and 25% to the fund managers ourselves. So we're sharing the profits. You guys are getting the lion's share of the profits, but we're sharing it too. So we're motivated to do as great as we can to provide the highest yields return that we can, so we can participate in the earnings as well too. So the fund is a high-yield mortgage fund that originates mortgage loans to real estate borrowers. The mortgages are typically short-term, just like before. Short-term, first lien position. They're renovation loans. We can do construction loans. We're in the Central Florida area, and it's primarily for single and multifamily residential properties. We've done construction loans in the past. It's not something we do most of. Our box, our bread and butter that we like, single family. The average sales price or the average loan amount is about $225,000. The average resale price right now is about $350,000. So these are smaller homes. These are late 1950s to 1980 type properties that need an update, that need some love and care, and that are widely prevalent in the Central Florida market. So our investment parameters, what does the investment look like? So the loan amounts that we're making, $75,000 to $2 million. I've never done a loan over $1 million. The terms, they're going to be 12 months. We can extend loans, which we do on a case-by-case basis. When we extend them, we typically add 1% to the interest rate and charge a fee, and that goes into the net earnings of the fund, which increases the yield for our investors. Our interest rate right now, the fund is at 11.51 is the average coupon. Starting rate is about 11% right now. It fluctuates mildly with the market, but not substantially. Amortization, it's an interest-only loan, 1 year, collateral, first lien position on the real estate, and the loans are going to be used for the acquisition and the refinance and the rehab of the properties. So some highlights of the fund that I think are really important. The fund provides monthly unaudited financial statements. We have got a third-party fund administrator, High Divide, and they do all of those CPAs that specialize in hedge funds and mortgage funds accounting. So they do all of our accounting. We give them, they have open access to our books, to our bank accounts. On a monthly basis, they do all of the accounting and they do all the distribution calculations. So it's signed off by professional CPAs. It's not our bookkeepers doing it, telling you this is what it is. We can provide a monthly balance sheet, a monthly income statement, and a statement of cash flows each month put together by High Divide. And then annually, we're going to do an audited financial statement. We think this is important also. This isn't a requirement, and there is an expense to it that the fund management pays for. But this is an audited financial statement. It's the highest level financial statement. It lets you know that what we're saying we're doing is what we're actually doing. We think that's really, really important for the trust of our investors. Right now, we've got a 6-month redemption period lockout. That means if you invest in the fund, we ask you to stay in for 6 months. After 6 months, if you want out, you just do a request that you want your investment back. And as mortgages satisfy, it'll be a first request, first out, and we'll redeem you. So since the fund inception, 9.61% return. I think that's up a little. 2024, our yield to date is about 10.01. We'll go over that. And then we've set this up as a REIT structure. We've got a few REIT tests that we have to comply with by the end of the year. If everything does well, there is a tax benefit of 20% reduction on the income from the fund. It's based on the 2017 Jobs Act. This is good through 2025, depending on how the election goes this year. It may be extended further. It's something, like I said, we've still got to pass one test, and then this could be an eligibility for a 20% deduction. All right, so what are benefits of becoming an investor in Capital Funding's Mortgage Fund 1? You're going to get a passive investment in real estate market through mortgages. If you're locally here in Central Florida, it's going to be an investment in Central Florida as well. We're providing money for investors to fix up neighborhoods, to fix up streets, to fix up areas, to renovate it and bring areas back to life. So it's an investment in the Central Florida market. Consistent monthly distributions. We're doing monthly distributions. There is going to be some variance in the amount you receive, but we want to be consistent. Like I said before, my goal is to get this into double digits, consistently a 10% yield. And now everyone's saying, yeah, well, I get 5% at the bank in a CD right now. And that's true. You do. But in a 6 months, you could be back down to 3% yield, which makes 10% a lot more attractive. But we think based on the risk that we have and that the steps that we take, that we think you're getting a lot of return without taking much additional risk from your bank. All right. So the high target yield, 9 to 11%. So we think you're getting a lot of additional yield for very little risk. So the risk-adjusted return, we think, is very, very good on this investment. It invests in short-term mortgages. Why is that important? Because this helps fight interest rate risk. We're not tying your money up for 5 years. We're making these loans, on average, they're about 7 months right now. That means a borrower takes out the loan, and in 7 months, they repay the loan. So interest rates aren't going to fluctuate that much. When we get our money back, if interest rates change and our rates change much, we'll be reinvesting it at that new rate. So this helps alleviate interest rate risk. And then we also have the REIT tax structure, which may provide the 20% benefit. All right, fund distributions. So here's our historical fund performance. It hasn't been updated for May, but I'd like to share that May returns were 11.61%. We had a ton of originations, and we've gotten our average coupon up from about 10 when we started the fund to 11.51. So you'll see historically, it's been pretty consistent, almost 9.5 for the first year to date. And then 2024, almost 10, 9.5, almost 9.5, then over 10 in April, and May was 11.61%. So each month I'm going through our performance with our investors, sending out a video of the performance review and giving a monthly update of what Capital Funding is up to as well too. So we want to be transparent. We want to let our investors know, hey, this is what's going on. This is how our returns were calculated. And if you have any questions, we're here for you. So investor return, what does it equal? So it's all of the income coming into our fund, less our expenses. And then we take an asset management fee of 1.5% right off the top. After that, we've got a preferred return to our investors, that's you and me, of 7%. And so then the remaining is our net profit. whatever's left over after that preferred return of 7% is what we call net profit. 75% of that is going to investors, 25% is going to the management. So the investor return is going to be calculated as your 75% net profit plus your 7% preferred return. All of these are calculated by high divide. They break everything down in the financial statements on a monthly basis. It's really, really nice to be able to get financials on a monthly basis to get a true idea of what's going on. It's not a black box where we just spit out a number and you hope and pray it's real. There's real numbers behind this. So on our April distribution, let's just walk through a calculation. If you had investment of $100,000 in the fund, the income per that $100,000 would have been $1,052. We take our management fee off the top. That's $125. That's to run the operations. So we have $927 left to distribute. 7% of that is your preferred return. We're going to take that out immediately. $583 is calculated as your preferred return. So the net profit remaining is $344. We're chopping that up. 75% to you, our investors, 25% to us, the management team. So $258 to you guys, $86 to us. So our investor distribution for April was $583 preferred, $258 from the net profit, a total distribution of $841. And that was based on 10.09%. May was 11.61%. So that $841 probably was over $1,000 for the month of May. So again, being in all transparency, we're trying to show you how does the fund work. Outperforming the market. So here's our fund. We're right at 10% as our yield since inception. 6-month CD right now is 5 to 5.25, depending on where you go. We've got a REIT index. It's tough comparison, but a little over 7% for one of these national composite REIT indexes. So we feel, you're getting a good, healthy return for a historical, consistent performance of no losses and no foreclosures. So once again, we'll go over the summary for the fund. A minimum investment in the fund is $50,000 we're requesting. The management fee that we charge is 1.5%. Income distributions monthly. So you guys are getting monthly distributions. If you invested on August 1st, you would receive your first distribution September 20th to September 25th. So we close out the books. High Divide, our fund administrator, calculates the numbers, and then we distribute the distributions monthly around the 20th to the 25th. So redemptions are monthly. If you have a request to redeem your investment, you can do that each month. Just reach out to us and we'll put in the redemption request. We do request the 6-month lockup period. We have a 6-month commitment that we like and kind of look at it as a 6-month CD. If you're at 6 months, if something comes up, you want your money, you make a redemption request. So our local legal here is Gray Squires Binford, and our national legal that helped us form this and have any questions about the REIT or anything like that is Gerasi Law Firm. Gray has been a force here in the local market, in the real estate foreclosure market, and Gerasi is the leader law firm in our space of private money lending. Our administrator that I've mentioned a few times, High Divide Management, they're great. They're out of Kansas City. CPAs, good people. They do all the books and they calculate all the distributions and they prepare all the financial statements for us on a monthly basis. Right now, the auditor, Spiegel Accountancy Corp., they're also an industry leader in the private money space, and they'll be doing an annual audit for us. So what are the next steps? If this sounds interesting to you, you can reach out to me. We can do a one-on-one to get a little more detail. This is just our presentation. I can share numbers with you, financial numbers, metrics, all the data that we look at on a monthly basis. So you have a really good understanding of capital fundings and the fund. And then you make a commitment. I want to invest $100,000. What we do need is an accredited investor verification. This can be from your CPA or from your attorney. Or we also have a third-party service that we will pay for to get it done online for you very fast. We just had somebody this week do a $330,000 investment. They got their accreditation verification same day. So we can do that. Then we have onboarding documents. We have them online where you can do it electronically or you can do them manually. And then you make the wire to the fund. And then you start receiving your monthly distributions following the end of the month. All right, so here's our team. Like I said, we are located in downtown Orlando. We've got an office there. We have 7 people in the office that help underwrite, service, and do all the back-end paperwork for the for the whole process. But we also have a lot of partners that we don't employ, but we have agreements with that provide a ton of great services. And that list is growing. These are all things that we offer our borrowers to either become more efficient for us, for them, to add value to them. Privy is a new AI-based market software program that helps locate deals for our investors that we provide free of charge to our borrowers. It's something that's been really cool. But we've got a lot of people that make up our team that provide services to us to help make us safe, efficient, and consistent. All right, so we've got one more video I'm going to show you, and then we should be at the end.
My name is Gaurav Mukherjee. I'm sort of an entrepreneur in many ways, from being an attorney to working in real estate. Also spent a lot of time working in cybersecurity. And I've actually been with Cap Funding maybe before it even had the name Cap Funding. And my family office has put together a portfolio. We started small, one loan, just like everybody else. And then we built that process up. In terms of number of deals, we've done over $100 million in deals. It's really great, and Alex makes it very easy for us. But the one thing I would say is that, you don't have to have $100 million to invest with Alex. When it comes down to it, the investors come back to Cap Funding, and that's because their product is solid. They always close, they always make sure the investors are taken care of, and they always make sure that the borrowers are taken care of. And I think that's really important to have that track record. About a year ago, my dad decided to retire, worked a very long life, and he turned around and said, he's got some retirement funds, he wants to know where to put them. I recommended Cap Fundings. I did. And not just because I've been investing with them, but because I want to make sure my parents have that nest egg for them in their retirement years. And they started small, and they've been investing with Alex as well, and they're very pleased with it.
My name is Karen Parslow. I've been in real estate for 10 years. I mostly do flips now. I try to do 20 a year, but I also have rentals in Orlando. I have been an investor with Capital Fundings since they started about 5 years ago. My relationship with Alex has always been great. He's always there, professional, on time, organized. He knows his stuff. Also, the fact that Capital Fundings is local, it's always great to have someone right next door. Anytime you have a question or you're in need of clarification of anything, he's right there. I would recommend to invest with Capital Funding because their communication is great. They're always punctual with the payments, and it's just something solid as an investment that kind of gives you peace of mind. It's been a breeze.
I'm Dr. Ben Lerner. I'm the CEO of HP2 Medical. I'm a consultant. I've written 2 New York Times best-selling books and actually teach other doctors how to manage their finances. I've been investing with Capital Fundings for a little over 2 years now. I'm a busy professional doctor, and so when you're doing a lot of different investments, you don't want to have to put in a lot of time, connect all the different people, get the money from the bank to the investment, from the investment back to the bank. So they've done a phenomenal job working with our investment advisors. The whole process is extremely seamless. I would recommend Capital Fundings because they have a great track record, not just with me, but they've done an endless amount of loans. They focus on investors that they've worked with before, so they can trust that these are people who will fix and flip and sell the house, so you know that your money's secure. They are very upfront with, here are the properties and here's the credit score of the people that want to borrow, and they point out exactly what locations around the city that you're investing in. And we've now done this many, many times, and they've all been completely successful.
My name is Katrina Ederson Bogumil. I'm Alex Bogumil's wife, and I am a vice president and part owner of AA Concepts. One of the most important things about Capital Funding that I have really cherished is how I've been able to give back with the interest money that I've made off of Capital Funding Mortgage Fund 1. So I've been able to change my parents' lives and my sister's lives just by helping them with the money that I've received from the investments, which has been really helpful for our family. It's just been something I've watched my parents be happier. So that's been really special. I had all this passion about taking risk and investing and doing all these things, but when I met Alex, he was one of the safest bet I've ever made, just because I trust him. I don't feel like anything that I do with Alex or Capital Funding or his team should be ever unnoticed, because it's like one of the best investments I've ever made.
So, just to wrap it up, like you started at the beginning of this presentation, what are we here for? We have an offering of investment in Capital Funding's Mortgage Fund 1 that we think is a safe, conservative, consistent high yielding, low risk investment. It's historically, we've had great results for 10 years. We're only in the markets that we really, really understand and that we like to consider ourselves experts for. And we've got the statistics to back it up. And based on our performance of over 10%, we're providing a really extra additional yield compared to that 6% or 5% in the bank. So, we're looking for new capital to raise in this fund so we can continue to grow our operations here in the Central Florida market. If you're interested, I would invite you to set up a meeting and come into the office and meet with me one-on-one, or I could come to you and grab a coffee, or we could speak over the phone or email and talk in further detail about it. But we're really looking for more investors, and we hope that you have really enjoyed this presentation and you're seriously considering us.